It's 1987. In a crowded ballroom a few blocks off of Wall Street, a new CEO of a struggling company delivered a speech to a room of shareholders. And he bombed terribly. Investors fled and the stock tanked. Everyone thought he was out of his mind. But over time, his commitment to this one radical idea ended up proving them all wrong. Those who sold the stock would eventually call it the biggest mistake of their careers, and it would go on to become one of the most famous stories in American business history. And it's all true.
Aluminum is fast becoming a part of your daily life. Whatever it is, it's always aluminum. And as long as it's Alcoa aluminum, you know you're living with the best in aluminum value.
Everyone loves a good 80s corporate drama, right? Well, here's one for the books. You might not know the name Alcoa, but this American company is one of the largest aluminum manufacturers in the world. But when this new CEO took the helm of the aluminum giant, it was struggling. For nearly 100 years, Alcoa enjoyed a virtual monopoly on aluminum production in the US. Toys, pots, pans, baseball bats, automobiles, airplanes, if it had aluminum, for most of the 20th century, it was made by Alcoa. But by the 1980s, antitrust regulation, stiffer competition, and an oversupply of aluminum in the US market led to a financial crunch for the company. Alcoa needed a miracle, and in October of 1987, shareholders, investors, and employees were waiting anxiously for a speech from their new CEO who promised a new way forward for the ailing company. In a crowded ballroom a few blocks off of Wall Street, Paul O'Neill was prepared to drop a truth bomb that no one saw coming. It wasn't about some new product. It wasn't about pivoting their business model. In fact, it wasn't even really about money at all. When O'Neill was approached, he needed a plan. He was an engineer by training, but he wasn't familiar with producing aluminum. So he took it upon himself to become an expert. He started by visiting Alcoa's 175 plants across the country. He also picked up ideas in factories Alcoa didn't own, traveling to Spain and Argentina. And O'Neill needed to understand every step in the process. How does that process work exactly?
High temperatures removes impurities and speeds the chemical changes. It is precipitated in great tanks 5 stories high. Heat the liquid to white hot temperature to remove the water. The magic of electricity must be applied in the furnace.
Okay, you get the picture. In short, mining, crushing, smelting, coiling, and casting, it's dangerous and intensive work. And that was the core of the issue. That was the breakthrough insight that he could bring to the shareholder meeting. So the stage is set. A changing industry, a new person at the helm, a lot of moving parts, and an urgent need for ideas or answers. Many investors arrived at the hotel expecting the usual grand turnaround vision of how this new leader was going to reduce overhead, improve profits, and most importantly to them, raise the stock price. Paul O'Neill stepped onto the stage and addressed the audience as Alcoa's new CEO in that Wall Street ballroom and opened his speech with this. Every year, numerous Alcoa workers are injured so badly that they miss a day of work. He continued, "Our safety record is better than the general American workforce, especially considering that our employees work with metals that are 1,500 degrees and machines that can rip a man's arm off, but it's not good enough. I intend to make Alcoa the safest company in America. I intend to go for 0 injuries." The room was stunned. Apparently, you could hear a pin drop. When the floor was open for questions, one attendee asked about inventories, another asked about capital ratios. Each time, O'Neill returned to the same theme. "I'm not certain you heard me," he said. "If you want to understand how Alcoa is doing, you need to look at our workplace safety figures. If we bring our injury rates down, it won't be because of cheerleading or the nonsense you sometimes hear from other CEOs. It will be because of the individuals at this company that have agreed to become part of something important. Safety will be an indicator that we're making progress in changing our habits across the entire institution. That's how we should be judged." One investor, recounting the story decades later, said he fled from the meeting and called his firm. The board put a crazy hippie in charge and he's going to kill the company. Sell your shares. He would later say it was also literally the worst piece of advice he ever gave in his entire career. He was far from the only investor who felt that way at that time. Apparently, investors were calling colleagues and clients with sell orders. Journalists were drafting their articles on how the new Alcoa CEO had lost his mind. Now, the counterintuitive thing here, which kind of justified the reaction of investors, was this. Alcoa was an industry leader in safety. By the numbers, its safety record was really one of the few things it was doing right. But that was part of the real genius of O'Neill's plan. Part of leadership, O'Neill once explained, is to create a crisis. Speeches are one thing, but follow-through is another. What did O'Neill do to follow through on this strategy that investors were certain would ruin the company? He didn't want Alcoa to set goals based on industry averages or what rivals did. Instead, O'Neill asked managers to push safety and efficiency as far as they could. And it worked. When accidents happened, weekly company-wide conference calls were now a requirement, and everyone needed to share what they learned from it. O'Neill solidified that boundary. He fired a manager in Mexico who didn't share injury data. He made the plant managers accountable for their safety record. Recall George Becker of United Steelworkers. It was a smart thing to do. After 2 years, by all internal metrics, efficiency increased, product quality improved, and profits soared. Why? Because the systems they engineered to ostensibly improve safety actually had the effect of improving process. From clearer communication channels to more rigorous evaluations, the focus on safety, it turned out, was a proxy for operational excellence. Workers who felt valued and protected were more engaged and productive, and everyone benefited from that shift. By the time O'Neill stepped down in 2000, Alcoa's yearly net income had multiplied 5-fold from when he took the helm, and its market value had surged by $27 billion. This remarkable growth was achieved as Alcoa transformed into one of the world's safest companies. Paul O'Neill's turnaround miracle offers a model in transformative leadership. So take note, startup founders. In a world filled with distractions, identifying and committing to a single overarching objective can galvanize an organization. Culture isn't just a buzzword, it's a bedrock upon which successful companies are built. Hi, if you liked this video and you want to see others like it, you should subscribe. You can also check out our website, startupsavant.com, and you can also check out our parent website, Trick.com, if you want free business tools. We've got all sorts of stuff on there. Goodbye.